really certainly seeing the Bitcoin mining as a key element for stabilizing the grid. But over time, we've seen that many of these companies now have gone to move more to a Bitcoin standard, where they see the Bitcoin as the endpoint. If you had done that historically, you would be making much more superior returns as measured in fiat than having sold it as a product. If the big energy companies begin to move into this space, I think they can be quite influential within their network integrations that kind of plays out, which is Bitcoin mining being integrated at AI, high performance compute data centers.
Hi everyone, it's good to meet you, Ted, today, and thank you very much for devoting some time to this conversation. I think it will be very, very insightful. I'll begin with a quick introduction. My name is Nasib Fathi. I'm a scientific researcher working at Moscow University of Vienna. I'm studying Bitcoin, and in the meantime, I'm also head of growth at DLT Austria. It's the biggest crypto nonprofit in Austria. And today I'm actually recording a podcast, right? Usually I'm interviewing, but today I'm recording a podcast today together with Ted, right? So please, Ted, introduce yourself too.
Hi, Nasib. Thanks so much for having me on the pod. I've seen a couple of your interview episodes that you kicked off and published a few weeks ago, and really love the content and the style and everything. And really great meeting you at Vienna Blockchain Week a few months ago. It was really cool. But yeah, my name's Ted Paulus. I'm a Canadian. I've been living in Europe for over 13 years now. My background is in chemical engineering. Worked in the Canadian oil and gas industry for the first portion of my career before coming to Europe, where I studied an MBA at INSEAD and then joined Boston Consulting Group's energy practice, where I helped on strategy projects for large European and international energy companies, including fossil fuel based oil and gas companies as well as renewable energy producers, and supporting the oil and gas companies, also understanding their sustainability and energy transition strategies. In parallel to that, I've been a Bitcoiner since 2013, and have ended up working, after working in corporate strategy at large oil and gas companies from 2016 to 2020, I had the opportunity to join Bitpanda in Vienna, your hometown, and got the chance to kind of build up their first strategy function through that hyper growth and then crypto winter market that followed through from 2020 to 2022. So that gave me some exposure to understanding the broader crypto industry, if you will. But my passion has always been with Bitcoin in particular. And earlier this year, I started Orange Wheel, which is really about bringing Bitcoin strategies to businesses. And we try to bring a holistic perspective, thinking about Bitcoin from a treasury lens, so as a reserve asset, for payments, for capital structuring, capital allocation, and also Bitcoin mining. And where we found in the last few months, when we start looking at the market and taking our value proposition to two customer segments here in Northern Europe. I'm based in Denmark, by the way. I should have mentioned that. Mm-hmm. Based here in Copenhagen. Certainly here in Northern Europe, there seems to be more interest at this stage in Bitcoin mining. I think that's not too unsurprising because companies can see the monetary benefit without necessarily having to think about it as a reserve asset or even understanding yet the Bitcoin thesis and what it means to have Bitcoin as money. For first entry point, many of these companies can just simply see it as a product that enhances their energy systems and improves the economics. So that's kind of been our focus. Now we've been doubling down on that area in the last couple of months and really focusing on bringing a solid understanding of the economic implications of Bitcoin mining being integrated into energy systems, and then being able to also provide kind of turnkey solutions to clients who want to implement these types of solutions. So partnering with Bitcoin mining companies, hardware producers, installation companies, and also ancillary services, grid balancing, and so forth. So really that kind of integrated solution. So that was a little bit of a whirlwind about who I am, what Orange Wheel is all about, and what our focus has been in the last few months.
Perfect. Then I think we can begin with the list of topics, right, that you have already mentioned. So Bitcoin mining itself it starts to fit naturally into modern energy systems, right? And instead of just being seen as a digital activity and so on. So what is your stance on this? What do you think about it?
Yeah, no, I think it's a really interesting trend that we're seeing happening in the space. I think the perspective I've learned from speaking to those developing the ASIC chips, they kind of have a perspective on the fundamental hardware restrictions, and that kind of drives a little bit of the economics for the actual project. So what I mean by that is the percentage change in efficiencies of the chips have been quite large historically. So every new generation of chip, which comes out maybe every 18 to 24 months, would have like a 50 to 100% efficiency improvement. And now we're seeing the efficiency improvements in absolute terms being larger, but on relative terms is decreasing as we kind of reach certain physical limitations on the ASIC chips until we get to kind of things like quantum and so forth. So what that implies then is that the obsolescence rate of these chips is going to be lower than it had been historically. And that then changes the project economics, the project design optimization. So when your obsolescence rate is very fast, the key thing is to just do things at scale. So really, companies could afford to use that technological advantage to just go in and deploy as large a scale projects as possible. So these kind of mega data centers, as we've seen kind of emerge in places like the United States and to a lesser degree in Iceland and some other jurisdictions. But as that obsolescence rate comes down and the technological benefit of the hardware becomes less distinctive, then it really does become a game on how can we get the cheapest electricity and also boost the economics through additional applications, let's say, things like heat recovery, grid balancing and ancillary services. So everything else you can do to kind of get squeeze additional value out of the Bitcoin mining infrastructure that's been installed. So it is moving in general, to kind of come back to your question, from kind of a standalone project focus into more integrated focus. So integrating into already existing energy systems.
Yes, and according to Cambridge Digital Mining Industry Report, and they've mentioned that Bitcoin mining and miners themselves, they're emerging, exactly direct citation, emerging as strategic partners for grid operators as a highly flexible demand size resource, right? So, and they can also, according to another study, they can also quickly adjust electricity consumption. That's also quite that can come in handy, right? In different situations. So, what do you think? In what ways can miners actually help the grid, right? Maybe by balancing supply and demand, right? Or using excess energy, right?
Yeah, definitely. I mean, I think that's, especially here in Europe, there's been a big build out of renewable generation capacity, primarily in the forms of wind and solar. And solar, especially in the last 4 or 5 years, there's been, pretty attractive subsidies that have kind of promoted the build out of a lot of solar infrastructure. And although renewables have the benefit of being, low CO2 intensity versus fossil fuels, the problem they have, as everybody's aware, is that the wind isn't blowing all the time and the sun's not shining all the time. So you get this kind of like volatility on the supply side. And what that ends up creating is quite a bit of stress on the grid to balance the supply and demand. So having a flexible demand source, although kind of counterintuitive, many people think, okay, when you have more demand, it's going to be detrimental to a grid to have more demand. But actually, because the demand is very flexible, very interruptible, there's no critical issue by turning off miners. They can turn off quite rapidly, so almost instantaneously, and you can also scale up and down how much voltage you send to the miners up to whatever capacity you might have installed at that location. And they're also independent, they could be co-located at the generation site or at consumption site or standalone. So also the locations they're put is sort of independent of the application of Bitcoin mining. So all these factors together make it, extremely flexible in multi-dimensions, and can then become that kind of balancing factor within the grid to ensure that there's kind of demand and supply is being balanced. So that's the pretty cool application. I think there are other access. You also mentioned kind of excess energy, and that's I think related to this on the supply side. When the wind is blowing so much, they often have to curtail production by shutting down certain turbines. So that's a lot of wasted potential energy that's now being kind of just shut down. And so again, having a flexible demand load on site to divert that electricity into helps to, first of all, provide a service to the Bitcoin network, which is always good, more networking hash rate, but also provide economic value to the project. And ultimately what that translates to is actually lower electricity prices for the consumers, because now there's more return on the investment in renewable infrastructure, therefore promoting more electricity supply, and the costs of curtailment and other things shutting down, opening up, and the costs of that are now mitigated. So it's kind of benefits a lot of different parties.
I know for a fact that even during the pre-commercial phases, I think there was a study that was conducted in Dubai. Even during the pre-commercial phases, Bitcoin mining supports the projects that are focused on renewable energy, right? On renewables in general. Do you think that in general Bitcoin mining can be considered as one of the supporting factors of the renewable energy sector development?
Yeah, certainly. And yeah, I think again, it's a bit counterintuitive to some to think how can a demand source end up promoting additional supply, particularly of renewables. But as we mentioned, it does improve the economic return on capital for renewable projects, and therefore the promotes a strong, a greater contribution to the energy mix of renewable sources. I think that's the kind of primary vector by which Bitcoin mining will improve the renewable green transition.
And when it comes to the economic benefits, right, that not only energy producers but also local communities can see when they partner with miners, are there some interesting insights that you can't really read much on when you are searching the web?
Good question. Yeah. I don't know if I necessarily have anything like super confident, like super unheard of, right? But I think there's a couple interesting stories here, right? One is in Africa. There's a company called Gridless, and I think there's many others out there. But by means of Bitcoin mining, they're enabling remote communities to get access to electricity that they would not have otherwise had the economic wherewithal to make happen. So we kind of forget sometimes that there's parts of the world where just even access to electricity is something that's not a granted, not something that's already in place. So that's one benefit to these kind of remote communities in developing countries. And then another one, I think this is already in the headlines, especially amongst Bitcoiners, but I will reiterate it, which is in Bhutan, where they have a lot of surplus energy from their hydro installations, and where the government has then been using that to mine Bitcoin and effectively hold, I believe, all of the Bitcoin that they're mining. And so they also get the benefit of the value appreciation of the Bitcoin as it monetizes. Because they're in a situation where all the capital has already been paid for, it's a national company. They can kind of, they don't necessarily need to focus on immediate returns on the capital. So they have that strategic foresight to think about holding it for the long term. So that's another really interesting case study. And then Another, I think, one, again, this might already be in the headlines, so it's not a big surprise, but in Texas, they're really certainly seeing the Bitcoin mining as a key element for stabilizing the grid, which then, also enables, the side effects of that is not only just having, no brownouts for their population, which has been problems in the past, right? And a few winters ago, they were having issues with brownouts and so forth. But also as they build out their microchip facilities. Samsung, for example, has one in Texas that they're completing right now. They really need to have very stable electricity going and supply of electricity going through to make sure that these things do not shut down, which can be extremely costly to those operations. So the industrial players and especially the very, very high end industrial players see significant benefits from having a more stable grid.
I see. And if we are talking about energy and Bitcoin mining, we need to touch upon at least slightly the environmental effects, right? Mm-hmm. So let me frame it this way. What are some of the environmental upsides, right? Upsides of using flexible on-demand mining, right? That we've been mentioning, which can power up or down when needed.
Specifically from like an environmental impact perspective?
Yeah.
Okay. So a few things I guess I'd mention. One is that there'd be less requirement to kind of turn on peaker plants. You would have this kind of ability to, if you are in a situation where you get to a point where you can scale down your consumption, that's effectively the same as increasing supply. And if you kind of design the capacity so that this is, as the demand increases, you kind of turn down the amount of electricity going into the miners and redirect that back to the grid, that can negate the need for peaker plants, which tend to be natural gas based in most European jurisdictions. So that has kind of direct implications on the scope 1 emissions within the energy system. Scope 2, I guess it'd be scope 2 emissions within the energy system. The other one is we discussed earlier, which was the kind of improving the overall economics and therefore enabling a broader build out of the capital in an unsubsidized way. And then, I think those are the two major ones for like sheer environmental impact.
Yeah. And when it comes to the economical side, right? Can you give me examples of when? And I'm sure you can, right? So can you give me examples of when Bitcoin mining and its integration or the interaction with this, right, helped the project to survive, the different economic turmoils, or if that wasn't the case, something different, right, or helped it to develop economically and become sustainable over long term, maybe.
It's a good question. We're actually in the process now of kind of trying to find real case studies of this, because I think it's a frontier space, especially here in Europe, where it's only starting to kind of get thought of in this way. Again, moving from kind of standalone into more integrated models. Okay. I know for certain though there is one fairly large scale project in Finland where they are also looking at the heat recovery side and being able to. And this is also something that can, by the way, I guess on the environmental impact, I should have raised this earlier, being able to kind of recover some of the heat and put that into a district heating system. And that again offsets the need to supply that through more CO2 intensive energy sources, which may be natural gas or coal in some cases. So that is one, I guess, like example of a project that, on a standalone basis may not have made sense. If we were just looking at kind of augmenting the district heating system, it might have been something that would have need to be paid for by the government or the municipality. But with the Bitcoin heating kind of coming in, it made the project more viable on an integrated basis.
Mm-hmm. And regarding the wasted heat, right? How is it happening? Like how is it being used? So what's the process and how efficient this is in reality? Yeah.
Yeah, so there's a couple different. This is getting a little bit into thermodynamics, but the heat comes off the chips, right? When the chips are running the computations, the ASIC chips, they effectively act like a resistor, right? So energy is never created nor destroyed. That's one of the first laws of thermodynamics. But it is converted through this process into heat. So effectively, as much heat or energy that goes into the chips comes out the other side as waste or byproduct heat. So then the mechanism is either, in most cases, the chips are in these data racks with fans blowing on them to cool them down, right? So the heat is kind of wafted away from the chips through convection, I guess, of cool air over the chips, and then hotter air comes out the other side. And so that hot air can be captured, I guess, or like vented through ducts into some sort of heat exchanger. So kind of a hot air based thing, but that is not as efficient, coming to the efficiency things, as using a liquid for heat transfer.
Okay.
So the mechanism that you'll more typically see when you really do want to get the heat and optimize for heat recovery will be through immersed, contained vessels, where the ASIC chips are immersed within a fluid. That fluid is dielectric, so it doesn't conduct electricity, so to make sure it doesn't interfere with the actual electrical computations, but it does conduct heat, and that will circulate over the chips, cooling the chips, keeping them from overheating, and then that will flow. That fluid will go through a heat exchanger, where it will mix with water. Not mix, sorry. It will touch with water, right? So you have some very narrow pipes that have the fluid that's from the chip container, and then the water is heated, and the dielectric fluid is cooled. So that heat is transferred from the dielectric fluid to the water, and then that hot water can flow through a hot water system in a building, for example. So in many apartment buildings, houses, and so forth will have kind of a hot water system that flows through that then radiates the heat out into the surroundings. So that's kind of a general example of your two different options, right? Either air cooling or dielectric fluid cooling.
Interesting. And okay, on the when it comes to the companies, right? Why do so many companies start with Bitcoin mining as their first step into the digital asset world?
Really good question, and I'd like to run a survey on this. So everything I'm saying is kind of just from like my impressions from having talked to a few companies, a few business leaders, and my kind of intuition, right? But my perspective is that, as I kind of might have discussed earlier, I think most people don't understand Bitcoin. They don't understand really what it represents, what it has the potential to become. That being that it is, and again, this is my perspective, but I think it's shared by most in the Bitcoin community, that it will become the fundamental base layer of the monetary system. But that's a big pill to swallow for most people. No pun intended. Orange pilling. So I think it's a much easier pill to swallow to say this is something that is a flexible demand source that can provide these types of economic benefits. And
environmental benefits as well.
Exactly. I mean, depending on what their needs are, right? It could be it could be economic, it could be environmental, it could be stability. So you can kind of offer, this is something that provides these benefits. You don't need to understand what it's doing. It's just providing these benefits, right? And a byproduct is then this kind of like asset, right? That they can, if they are in many cases still, the energy companies are not themselves investing in the mining infrastructure, so they don't even touch the Bitcoin yet. We do want to change that from the Orange Wheel perspective. We want the energy companies also to get direct exposure to Bitcoin, either contractually or through actually investing the capital themselves. But anyhow, the point is they can get the benefit without necessarily needing to understand the underlying thesis. And I think an example of this might be, and again, this is just kind of me looking back at history here, right? But you have a lot of Bitcoin mining companies that would treat Bitcoin as a product, right? They would, analogous to maybe a metal mining company, right? They get the metal and then they sell the metal and they get
And
dollars or
it makes
euros.
sense from a certain perspective, right? So because as you said, it's literally it's like digital mining. That's what it's being called, and that's how it can be perceived. Yeah,
Certainly. Yeah, I think there's a lot of analogies, right, that make sense in that regard. And just like any other business, they're going to think of the euros as their unit of account. They have to pay their expenses in that. They have to pay the electricity expenses, their employees. So they're going to convert the Bitcoin into fiat money, and they'll measure their, pay their expenses, they'll measure their profits again in fiat money. But over time, we've seen that many of these companies now have gone to move more to a Bitcoin standard, where they see the Bitcoin as the endpoint. So they're kind of trying to hold on to as much of it as possible. And this makes sense if you had done that historically, you would be making much more superior returns as measured in fiat than having sold it as a product. So I think this is often what happens, is that companies will, and so I think it's analogous also to many individuals, right? Many individuals might have been speculating on the price of Bitcoin initially, and then they realize, wait, I should not have sold it at that point in time. I should have just held it. And they kind of move over more to a Bitcoin standard at a personal level. And then I think companies see the same thing. They say, if I can finance my operations with debt, for example, that I pay 10 to 15% on, and hold my asset that appreciates at 35 to 50%, that delta is a pretty substantial gain that the Bitcoin's doing for me. So I think this is the kind of mechanism that it kind of happens. I think people get into it without necessarily needing to understand the thesis. Then they realize, having done some look backs, that the better economic decision would have been to hold it as a reserve asset versus seen it as a product, to the extent they can, based on their capital structure and their cost structure. And then I think they move, then I think it opens up maybe more doors to thinking about how Bitcoin can be applied to their corporate finances in other applications as well.
Mm-hmm. Do you think that Bitcoin mining, right, integration of the Bitcoin mining into the daily operations of energy providers and energy operators, energy companies, right, would actually affect the financial markets substantially, in a way that we would collectively as a society move way closer and way faster to the point where nobody really wants to convert BTC to fiat?
It's a good question. A good question. I think it's everybody plays a little step in that global movement towards a Bitcoin standard. I think the energy companies will be a contributor. It's hard to know how much influence that will have. It's a really interesting question. Mm-hmm. I just think I hadn't really thought of it before, but the amount of Bitcoin yet to be mined is actually quite low compared to that already has been mined now. So I think we're at 95% have been mined now. There's another 5% to come out. So maybe on that basis, it's not as influential as the institutional investors that are moving pre-existing capital into Bitcoin by buying it from the markets. That said, I think, if the big energy companies begin to move into this space, I think they can be quite influential within their network of stakeholders. So I think certainly it will promote the advancement of the world moving to a Bitcoin standard. I don't think it'll be the most, it won't be the most important thing, but I think overall in general, I think it'll be good for Europe in particular. Maybe this is a bit of a non sequitur, but Europe already has a very integrated energy system, with lots of district heating involved, lots of interconnects between different energy markets and so forth. So I think it's fertile ground for applying Bitcoin mining into these systems, and it's going to be good for the network overall. And I think, just kind of getting more parties exposed to Bitcoin and through Bitcoin mining will help to promote adoption. But again, I don't know if it's necessarily going to be I think things like the ETF, other financial products, I think those are probably bigger
drivers.
Drivers, for overall adoption.
Yeah, makes a lot of sense. And how does running a mining operation can help a company build real world experience with Bitcoin, right? So, for instance, Treasury, infrastructure, all the good stuff.
Yeah, totally. I mean, I think, just getting exposure to Bitcoin is probably the most important thing, right? And once you start mining, again, if you're doing it, at the very least, having a partner and then asking that partner, maybe becoming a bit curious and inquisitive about how they're handling the Bitcoin side of things. But even better, and I think, I hope to see more, and we want to kind of drive this forward a bit more, like joint ventures between the energy companies and the mining companies, and then ultimately the energy companies themselves becoming mining companies. Getting more direct exposure to ownership of the asset. And exactly as you've said, right? Then you kind of think, okay, how do I manage this on my balance sheet? So as you brought up, like, what is the custody solution that's right for me? Is it going to be managing my own keys? Is there going to be a multi-key, multi-signature solution that's appropriate? So just by that, you have the virtue of questioning, the understanding custody, understanding the responsibility that goes with that, the different custody solutions. And then there's the management of it as a reserve asset versus a product, and thinking about how to kind of manage that and getting exposure to thinking about the different strategies. So I think, again, as I kind of brought up earlier, companies might naturally start by thinking of it as a product. And then as they kind of, maybe years down the road, they do a look back and they start maybe changing their perspective, right? The ones who might have a bit more foresight or advisors that give them that foresight might already start thinking about that from day one. Instead of having to look back, they can see, okay, historical patterns like this. Why is the price going up so much? What can I expect the price to continue to do in the future? What's driving that? And so really then understanding a bit of the real underlying mechanism that's going on in terms of what we call the monetary transition. And then they also kind of just get into the ecosystem, if you will, right? I think it's a little bit about the human network as well, right? So, if you were to be the first large-scale renewable infrastructure player in Europe to start integrating Bitcoin mining, that would get quite a bit of media exposure. And these people would then be, I think, invited to speak on all interesting podcasts like yourselves and others out there. And then I think that networking also creates a lot of range of real life optionality, right? In terms of understanding how else Bitcoin can be applied into their businesses.
Do you think that every CFO of energy or other type of company, right, but especially in the energy sector, should think of Bitcoin as a potential product and consequently a treasury asset? I know that you have answered that in a way, but from the financial standpoint, do you think that they should look at it this way, prepare the strategy accordingly? And then how would they ideally manage it, at least from a high level view?
Yeah, I think the first step is certainly awareness, right? And I think that will come here quite rapidly in the next few years. I think once there are more real life case studies at scales that are, attention grabbing within the sector, I think then the benefits become kind of undeniable, and then replication to maintain that competitive advantage will be quite natural. So I think the awareness will propagate quite naturally. I'd like to see it happen faster, of course, but I think that's going to happen. I think at some point CFOs will and CEOs for that matter, COOs, the C-level team are not going to be able to ignore it, because some of their competitors are going to begin integrating.
Integrate.
Yeah. Yes, exactly. And then this idea of, seeing it as a product versus a long-term reserve asset, being the kind of the endpoint where it is the unit of account. I think that's going to be a bigger, as I mentioned earlier, a bigger step for companies to really get to. So I think that's part of the education we want to take to that segment. We want to help them understand that both the direct economic and operational benefits, and then also the treasury implications. But I do think it will be slower. I think simply because also for many of these companies, they'll have to explain that to their stakeholders. And I think as long as you have at least even one board member that dissents, it'll be perceived as being too, irresponsible, right? But I think at some point it will flip where it's the other way around, where not holding Bitcoin as the reserve asset for the longer term will be the irresponsible thing. But I think it's going to take time to get there. But again, I think that's all part of the journey, right? It's kind of starting with the mining side of things. And then I think over time as well, as it becomes a larger asset, more liquid asset, less volatile asset, with more institutional acceptance, that kind of perceived risk factor, both perceived risk in terms of like, is this seen as being a strange thing to do by holding it on the balance sheet? And also the actual price risk in terms of the volatility will both decrease with time. And so I think the combination of those factors, and the kind of just having the more intimate knowledge and exposure and understanding of the asset itself will lead more companies to do it. And then at some point, as I mentioned, there will just be this tipping point where it just becomes the standard way to operate.
Mm-hmm. I don't know. Possibly I should ask this the next question as well, because I still need to look into different types of financial instruments based on Bitcoin. Beyond simple treasury strategies. What do you think about them? When Michael Saylor introduced those, and he's been propagating a lot. And what is your stance on this?
Yeah, I think it's a natural state of humans to experiment, to innovate, and this area of financial and capital markets innovation, I think, is quite exciting. And although I think not every, just like in all experiments, when there's a new innovation, I guess in general, there's going to be all these different experiments around it, and many are going to fail and not be necessarily value adding, and other ones are going to succeed and proliferate. So we're certainly in that experimentation phase, and Michael Saylor's and strategy are at the frontier of that. Certainly on the public market side of things. I think what's also equally interesting is what's happening on more fund structures and loan structures, where there's a Bitcoin component to loans, for example, or to real estate funds. So that's the area so in macro sense, I think we're going to see lots of experimentation. Some are going to succeed, some are going to fail. But ultimately, intuitively, I would say, again, if you understand the Bitcoin thesis in the way that I do, it is the kind of like most pristine collateral you can have, and therefore, it can only strengthen a secured instrument, regardless of the structure. And therefore, I think these properly designed instruments that include a Bitcoin component will outperform the comparable alternatives that do not over time.
Do you see the future as do you see future as something multi-chain or more concentrated?
Okay, so that's another question, I guess, right? But yeah, but
it's an implementary question, yeah.
Yeah, but okay, on that side, my perspective on that is that I think when it comes to money, I think Bitcoin has already won that battle, so to speak. In at least in the form of store of value, and I hope also over time the medium of exchange piece. I think the medium of exchange, there's going to be more competition from the likes of CBDCs, stablecoins, and so forth. But over a longer period of time, once everybody uses it as store of value, and the scalability of the mini exchange is and costs are effectively negligible, so the scalability is not a problem, and the costs are effectively negligible, then there'll be no need to move to an intermediary instrument for exchanging value. People will only want to receive the Bitcoin that they know the counterparty already has, right? So I think that's the longer period. I think it will take several decades to get there, and in the interim period, this transition period, I think we're going to have kind of a free market of competition on the medium exchange side of things. Now, I think in parallel to that, I think there is going to be a multi-chain world for non-monetary applications. So I think there's going to be a wide plethora of utilities that different blockchains can provide. And I imagine that there probably will also be like bridges between the different blockchains for different services and so forth. So like one example might be identity and data privacy and a lot of these things. And I think we're seeing that happen. The kind of new block wars happening on blockchain are between core and knots about what kind of information should be on chain. And I think it's becoming quite clear that, you know, seeing the Bitcoin blockchain is only financial monetary transactions is kind of where we're heading to. Now, I guess where the debate sort of ends up being in this kind of question is how much additional layer 2s and 3s and 4s for new utility should be built on Bitcoin blockchain versus on other layer 1 blockchains. And I guess I'm kind of like personally a bit agnostic to it. But it's really the monetary component that really interests me the most. But I have no problems with other chains. There's some Bitcoiners that are like zealots about it that see other chains as being like heretical or something. I think it's great to see all these projects try and do stuff, and I hope many of them succeed. And then I think the question will be whether these, you know, retain, to what extent they bridge with Bitcoin, get layered on top of Bitcoin as, you know, applications with the layer 1 there, or stay as separate blockchains. And I think my intuition would say that it would be a heavily multi-chain world, just kind of knowing what I know today.
And looking ahead, how could the link between Bitcoin mining and energy systems change the future of both of the industries?
Yeah. Well, I think we talked a lot about the energy side, but I'll kind of reiterate that. I think there's going to be more companies getting, greater build out of renewable infrastructure, better use of energy that might be stranded or uneconomic. So I think we're going to have a better utilization of the energy we do produce as a globe. It's going to be a cleaner energy future on average. I think it's going to help to promote the energy transition. And then we're going to get this kind of gradual infiltration of Bitcoin into a broader swath of, you know, the energy sector companies, right? And this kind of moving them slightly and gradually and progressively into a Bitcoin standard way of thinking. And then we have the Bitcoin mining itself. I think we're going to have a more, I hope, distributed mining network. So I think there's certainly concerns right now about, you know, too much concentration of mining, both in terms of the pools, the geographical jurisdictions. So right now, you know, it's very high proportion of it is coming from, you know, United States, arguably Russia and China as well. I think that data is a little less transparent, but I think there's lots to show that there's still a lot of mining in China despite the ban. And so I think, you know, given the geopolitical tensions we have, I think it's to some degree risky having too much concentration of mining capacity within certain political jurisdictions. So I think this will also move to a more distributed, geographically distributed, and diverse set of power, sort of Bitcoin mining. And then I think it's also just going to be a generally stronger network, just having more hash power contributing. So I think both the Bitcoin network and energy companies are going to benefit through this integration.
But what about the electricity demand? Because data centers will demand more of it, right? So not mentioning the AI yet. So electricity demand from data centers and crypto mining could increase, and it was projected to increase by more than way above 100%, right? By the end of the decade, right? By 2030. So how, or do you think that means that there should be tighter coupling between, compute and energy systems that we are talking about?
Yeah, no, that's really, really fascinating, right? Because I think there is, at a macro level, huge demand increases expected over the coming decades, mainly driven, but not exclusively, by AI compute, high performance compute. So that is potentially a challenge. I think in some ways it's and certainly when this kind of AI race that China and the US are in together, the US is well behind China when it comes to just sheer electricity production. So it's a bit of a bottleneck for them. So I think on the one hand, I think if it was just Bitcoin or crypto mining that was, the driver, there wouldn't be this kind of like government level and societal level push to get more supply put into the network. But the AI compute is kind of created that drive to really build out the generation capacity and a bit more, let's say, openness to all sorts of power sources. So I guess in particular nuclear, right? So I think nuclear has been perceived in the Western world, most markets, maybe France and Finland excluded, about being, quite dangerous and bad for the environment. But I think now we're seeing a more receptiveness to move to both, reactivation and construction of new traditional centralized nuclear plants, but also, small modular nuclear reactors as well. So that is like, and then I think to your other part of the question, right? That's the main driver. I think Bitcoin mining is going to look relatively small in terms of its energy demand versus all the AI compute stuff that's growing. But we're also seeing, as you kind of alluded to, Nasib, a benefit of co-location of high performance compute and Bitcoin mining ASICs. Again, because these big centralized plants might have a power purchase agreement for, let's say, 100 megawatts, but the compute is also volatile. They're not using the full electricity at any given time. That also depends on how the queries are circulated through the cloud to kind of get to that, as well as the demand base of users kind of using the LLMs and so forth. So anyhow, you will again have this kind of like buffer that Bitcoin mining can kind of satisfy to be flexible to take that excess electricity as required. So I think directionally, it does appear like that will also be another one of these kind of integrations that kind of plays out, which is Bitcoin mining being integrated at AI high performance compute data centers.
But okay, and then the last question is really interesting because economic benefit is something that is a variable that we cannot really exclude from the equation, right? Especially when there are geopolitical tensions. So people tend to lean towards more economically beneficial and at the same time energy-wise efficient solutions, right? So do you think that Bitcoin mining can be indeed effectively co-integrated with AI, or the trend that at times is being stressed online regarding the Bitcoin miners, converting into AI data centers, right? Effectively, do you think this trend can become some sort of an obstacle for the industry in general?
Yes, but I think that obstacle is localized, I suppose, right? So I guess it's an interesting question because I may have to look at the whole kind of supply chain in a sense, right? But I think assuming there's no the competition for, so these are different chips, first of all, right? So I guess like if we kind of go back to that level of it, and you kind of think that the precursors to the chips are unlimited supply effectively, then there shouldn't be any, just because you're making a lot of high performance compute chips, NVIDIA Blackwells and so forth, I don't think that will restrict the generation of the ASICs. So I think on the supply chain side of things, there shouldn't be competition there. On the capital side, as I think you brought up, right, where it's like companies can make more money right now doing high performance compute data centers than Bitcoin mining. So more capital might flow to that application than would flow to the Bitcoin miner. So I think that's a potential barrier, but I think that barrier is temporal in nature. And also it's the large centralized data centers where that is a competitive force. I think, again, you'll probably end up driving more these smaller integrated applications will maybe be relatively more attractive for those who are investing capital in Bitcoin mining. But certainly, I think if you kind of think on a very macroeconomic scale and just like how much capital is available and where is it going to, there probably is some effect there, and we're seeing it in terms of, as you brought up, some Bitcoin mining companies converting to AI, compute companies. But I guess my thesis at least is like these companies haven't lost the capabilities to do Bitcoin mining. So over time, as the economics of each of these relative projects changes relative to one another, they might end up scaling in more Bitcoin mining into their capital deployment over time. So we'll see how it plays out. But I think yes, some sort of competition for capital and resources and so forth. But I don't think it's a permanent.
Yeah, it's hard to predict these things, right? Because for them it's also a dilemma, right? Because something has an immediate effect, immediate result, right? It yields an immediate result. So we're speaking about AI, obviously. And something else can yield not less results and maybe even more over time, right? But even in this case, you don't know how to exactly balance this. And I guess that's why we have also, and it's fair to mention, right? We have cases where Bitcoin miners didn't just convert, right? They're diversifying, right? Maybe diversification is the right way to go, at least for some who are looking forward into the future, who are more confident about their initial choice, right? So, and their initial choice was Bitcoin mining, right? It was Bitcoin and Bitcoin mining. So it's interesting to see how it will play out, and it's hard to predict, really.
Totally agree. And I do think there's probably some value in having both capabilities and being able to say, here's a project where it's exclusively a high performance compute, another project where it's a combination of co-location, where that for that particular circumstance might be the optimal project.
Exactly. And just to conclude, I think that when it comes to energy systems and energy sector, Bitcoin mining is indeed a really good solution in some cases a great complementary solution, I would say, right? That would only strengthen this industry, especially in Europe, as you mentioned, because of the co-integrated system, right? More holistic one. So I really like what you guys are doing.
Thanks very much. No, it's been a fantastic interview. I think really interesting questions, some of which I have food for thought, where I might have to go and do a little bit more thinking around about the kind of questions about how this is going to unfold in the future and get some thinking around that.
Thank you very much too, and I will add all links, right, to your profiles, I guess LinkedIn, right, to the website as well, and I'm pretty sure that Ted will be ready to answer your questions, guys. He's very knowledgeable about what he's doing, and there are a lot of things, as it turns out, right, that we both can look into and see what the future brings. So if you like this episode, subscribe, right, follow both of us, send a connection request, and share this episode with somebody curious.